Welcome. In this video, Xcn coin trend broken. Is the rally coming? We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand. There are strong technical signs that the long-standing downtrend structure on the chart is finally coming to an end, and the price is moving to break out of this pressure. In the past, this downtrend has acted as a line of resistance that has continuously pressured the price downwards, shaking investors' confidence and creating a cautious atmosphere in the market. However, recent price action suggests that this trend has now become invalid. The price has broken through this area and gained upside freedom, and the market has begun to regain hope. The price breaking this falling trend line to the upside is a very important development in terms of technical analysis. Such breakouts signal not only the end of a trend, but also the beginning of a new direction. Especially if this breakout is supported by volume, the reliability of the breakout increases even more. And what's also noteworthy here is that the price retraced immediately after this breakout, recontacting the trend line. This move is called a retest in technical analysis and is an essential part of healthy breakouts. This is because when the price tests this previously resistance line as support, it reinforces traders' confidence in this level. The retest phase is also a process of market confirmation. So if the price has successfully tested this falling trend line as support, which it couldn't break through before, this strongly signals that a new uptrend may begin in the market. The fact that the price regained upward momentum after the retest confirms this scenario. And this is exactly what is happening in the market right now. The price broke the downtrend, retraced back to test this line, and then started its upward progress. This structure also presents a very positive picture in terms of investor psychology, because a downtrend break is one of the technical signals that most traders are waiting for. With this signal, investors start to regain confidence in the market and may increase their positions. The upward reaction, especially after the retest, indicates that new buyers have entered the market and the price has now found a new upward movement area. This creates a very strong structure, not only in technical terms, but also in terms of fundamental psychological support. Moreover, such breakouts are often harbingers of larger trend reversals. In other words, it sets the stage for the beginning of not only short-term, but also medium and long-term uptrends. This is because the end of a downtrend means that seller pressure is weakening and buyers are regaining strength. Such scenarios can cause prices to target new highs and move with strong momentum. In the current situation, the price has left the retest phase behind and continues its upward movement step by step. This shows us that the market is now pricing more bullish than bearish, and investors are shaping their positions accordingly. The new support-resistance structures that may form after this breakout are especially valuable in terms of seeing how healthy the trend will continue. If the price crosses the previous peak and then makes a higher low in each upward movement, this is a clear indication that we are now in an uptrend. It should be noted that the breakout of downtrends often signals the beginning of a new price discovery process. Especially when these breakouts occur within a strong pattern or structure, they set the stage for big price moves. Therefore, the current position of the price offers exciting opportunities for traders. With the right risk management, following such breakouts can help traders generate big returns. But we can't just analyze trends, let's look at other metrics. Stay tuned. Within the framework of the Elliott wave theory, we can say that the price has now entered a very critical and exciting phase. Especially when the wave sequence of the technical structure is taken into account, it is clearly observed that the market has successfully completed the second wave of correction and is now transitioning to the third wave, which marks the beginning of a much stronger and voluminous movement. This is a very positive development for investors who trade based on technical analysis. Because in Elliott wave theory, the third wave is often defined as the wave with the strongest, fastest, and widest price movement. Therefore, the current structure looks extremely promising. First of all, the completion of the second wave indicates that market participants are now coming out of the correction and preparing for a more decisive and directional price move. The second wave is usually a pullback following the first wave, and this phase can create some indecision among traders. However, once this correction is completed and the price enters the third wave, there is considerable momentum and stability in the market. The fact that this transition has been successful in technical terms can be interpreted as a strong sign that prices may move upwards in the coming period in a hard and voluminous way. The start of the third wave also indicates that more buying power is coming into play in the market, and investors are now more in agreement about the direction. This is why the third wave is usually the sharpest and most consistent compared to the others. Technically, during this wave, The price often breaks significant resistance levels, attracts a lot of attention from market participants, and volumes increase significantly. Especially after the second wave, this attack attracts investors back to the market, both psychologically and technically, and strengthens the bullish momentum. According to Elliott wave principles, the target level of the third wave is usually determined according to the Fibonacci extension ratios of the first wave. The most notable among these ratios are the 1,618 and 2,272 levels. The current technical structure suggests that these targets are now active, and it is highly likely that the price will move towards these levels. So, if the third wave, if it sticks to its ideal pattern, is expected to reach these Fibonacci target zones, indicating a very satisfying bullish potential relative to current levels. Moreover, this pattern generates very positive signals not only for short-term, but also for medium and long-term investors. This is because the third wave is the phase in which an asset advances the most within the trend. This makes it easier for the price to break through resistances and reach unprecedented levels. Moreover, during this period, investor confidence increases, market psychology turns positive, and technical analysis patterns start to work more accurately. This, in turn, ensures a steady advance in the price. The third wave is also very important for investor psychology, because in this phase, confidence in the market is restored. Investors who hesitated in the second wave, closed their positions early, or delayed entering the market want to get back into the market with the third wave. This leads to an increase in demand and a faster rise in the price. Also, during the third wave, many investors join the market as trend followers and increase their positions as the price moves upwards, further strengthening the trend. In the current situation, the fact that the price has successfully completed the second wave and moved into the third wave is a very valuable development for traders, especially for those who trade with technical analysis. Such transitions provide a great advantage for catching trend starts. RSI is one of the most frequently used and reliable indicators in the world of technical analysis. In particular, it helps traders identify overbought or oversold conditions in the market, but it is also a valuable tool for trend following and identifying reversal points. In the chart structure currently under review, there is a rather remarkable structure on the RSI. There is a clear uptrend structure, and the RSI is approaching this trend line. From a technical point of view, this is a very positive and exciting development, because such contacts can often herald strong upside price action. The rising trend structure observed on the chart is defined by a positively sloping line connecting the recent lows of the RSI. This line is an important technical reference point from which the indicator receives support on each of its pullbacks and initiates upward movement again. If the RSI approaches or touches this line, it could mean that buyers will again step in, as they have in the past, momentum will turn back to the upside, and the market will enter a positive wave. This is a very positive scenario for investors, reinforcing the possibility of the start of a new uptrend. We should follow the RSI trends. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.